I'm delighted to have Jay Farner, who is the CEO of Quicken Loans, on stage with us today for his first time at Lend It. Now, Jay has actually been in the online lending space, I think probably longer than just about anybody else in this room, before it really was called online lending. But he actually started at Quicken Loans back in the mid-90s when it was called Rock Financial. And he's grown this company, he's had several positions at the company, and he's grown it now into the largest mortgage provider in the country. And that to me has been quite a significant achievement. And what he's going to be here today to talk about is how technology is going to change the mortgage lending business. And to interview him today, we have Selena Wang from Bloomberg. So please join me in welcoming the CEO of Quicken Loans, Jay Farner, and Selena Wang.
Hi, thanks so much for being here. I'm very excited to be joined here by Jay Farner today. And you've actually been in the mortgage business for more than 2 decades. And in that time, there's been sweeping changes, and the whole process from the way people search for, finance, and even maintain a home has drastically changed. So is the impact of tech in the mortgage space still in its early innings? Where do you see the most room for innovation?
Yeah, so I've been doing this about 23 years. And I would say that the last 3 or 4 years, the acceleration of tech, I mean, you're really starting to feel it now, but I think we're just getting started. I think when you think about all the progress that's been made, mortgage has really lagged. And so we should expect to see a lot of progress in the coming years. We've got all these folks in this room probably working on things that'll help move us forward very quickly. So I would imagine it will continue to accelerate.
And which particular aspect do you think is going to accelerate?
Data. I think the data component, I mean, there are some things in mortgage that we're still constrained by from maybe a Fannie Mae or Freddie Mac perspective, but data is the one piece I think we're all working on, and we all realize that mortgage or any other lending product is simply different data components coming together to make a decision. And so I think we'll work very hard to make that data available and then be using artificial intelligence, machine learning, to give the consumer what they really deserve, which is the ability to press a button and get a response back immediately, not just telling them what they might be approved for, but actually guaranteeing them that approval.
You were recently promoted to CEO just over a year ago, and you had been at the company for about some 21 years. So what have you really set as your goals? Yeah,
so the mortgage business is a really fragmented business, and as is real estate in general. But I don't think it has to be that way. I think the company or companies that focus on the consumer experience and transforming how things are done have an opportunity to win big. And when I mean big, I mean 15, 20, 30% market share. And so at Quicken Loans and Rocket Mortgage, we are very focused on how do we make those big leaps forward to be the obvious choice for the consumer. And that's our goal.
And prior to CEO, you had actually been Chief Marketing Officer. You oversaw the launch of Rocket Mortgage, which many of us probably recognize from the very fun Super Bowl ads. And so what was the key really to attracting that first-time millennial home buyer demographic?
Yeah, I think that's the purpose of Rocket Mortgage, right? We thought about and did some research and just trusted our gut, I suppose, as well. Why were first-time home buyers avoiding the process? What was it about the experience that made people delay? And of course, the Great Recession certainly didn't help things, but we knew there were, a large base out there of folks who were qualified for a mortgage, who were paying more for rent than to own a home, but weren't moving forward. And the response was, it's too hard. It's just too hard. It's frustrating, and I don't want to get involved. And so the Rocket Mortgage, both the marketing campaign as well as the technology, was built to try to remove that friction, and it's worked. I mean, we've got 60-70% of all the users coming into Rocket Mortgage are first-time home buyers. So it's really drawing those folks in because they see that there's an easy way to get the information they're looking for.
Now, since the Great Recession, a ton of companies have cropped up that have tried to really simplify the complicated mortgage process. Quicken Loans was obviously an early mover, but now there are startups like SoFi, Loan Depot, Better Mortgage. So how are you really looking at the competitive landscape?
Yeah, there's never been more competition, and I think in the past, people would look at the lenders that were within 3 lines of them on the volume sheet. who's ahead of me and who's behind me. You can't operate that way any longer. You've got to be looking at the guy and the gal that's just come out and they're doing their first loan today. The way that technology is moving, we look at both, right? We're watching the big banks because their reach is so great. When they put an emphasis on getting into a market, they're going to get in. We're also watching the startups and spending a lot more time out here in California because we've got to be aware of anything and everything that's happening. We've got a team of people here. I saw Regis Hadieras, who probably a lot of folks in this room may know, Bill Parker, others that are out here all the time trying to determine what's being worked on and what's that new thing and how do we make sure we stay in front? Should we look at acquiring? I mean, we're probably more aggressive than we've ever been at keeping our eyes on the competition because it's moving so quickly.
And how are you looking at acquiring?
Well, we're a privately held organization, and so we typically make equity purchase if we were to buy an organization. We picked up Core Digital not too long ago, which has been a great acquisition. We're about to announce something else here in the next 30 days or so that we think will be exciting for our purchase business. So it's that would be my message. Rates are going up. And my experience over the last few decades is that when rates start ticking up, a lot of folks will take their eye off the ball, slow down. And it's the opposite. It's the time to push hard and grab market share, to find the opportunities to grow your business. When other people are maybe a bit nervous is when you should be moving forward.
And on that point, how are you looking at rising interest rates? Refinancing is a portion of the business. It's typically very sensitive to rate changes.
I never thought that a rate in the 4s was a high interest rate. So I think the first thing is just conditioning folks to realize that if you can borrow money at 4 3/4 on your mortgage, you're in good shape. Having done this for quite a period of time, there's always a need for refinance. It's not that people all of a sudden don't need money because it's $15 more a month. And so, yeah, we see some fluctuation, but we've built our company in a way where we can target market and kind of change our messaging to reach the person that may need the product at any given time. And we're also excited about the way purchase continues to grow. I think last time we looked, if you only measured our purchase business and compared it to overall mortgage volume, we're the 5th or 6th largest lender in the country. So purchase is great. It's changing. The landscape in terms of how it's being done is changing, and so we're full steam ahead.
Now, you touched on what you're looking at on the startup side, and you also have the banking side. They're starting to catch up. JP Morgan, Bank of America, Wells Fargo, they're all starting their own digital experiences. Yeah. Just a few clicks and you've got a mortgage. So what are their advantages and what are their disadvantages?
Well, I don't necessarily think about it as big bank or non-bank. I think about it as capitalized or not capitalized. So we happen to be very well capitalized. I think that gives you some breathing room in a changing market. But here's the thing I would challenge everybody in this room to think about. There are, disruptive businesses typically do more than speed up a process. So a lot of us here are working on taking a process and condensing the time. Whether it's a personal loan or an automobile loan or a mortgage, you realize that you actually spend 3 hours working on a loan, or a consumer spends an hour and a half working on something, but for some reason it takes 3 days or 5 days or 15 days. So you're shrinking that process. And that's one good way to think about it. But if you really want to be disruptive, maybe flip the business on its head. Like, why does it even have to be done the way that it's being done? Why are the players that are currently involved in your space involved? And do you really need them? And that's where I think that the startups or the entrepreneurial businesses will succeed because I'm not saying that the big banks won't do this, but I think they're more focused on condensing the existing process. They've got lots of big channels that are already established, and changing those channels would create a lot of conflict. So at work, I ask everybody, what's our superpower? I don't want to really hear about the idea unless it's something special that no one else can do. Then we should focus on it. If we're simply doing something that 10 other people are doing and we hope that we're going to get there faster than they do, then we're probably not focused on the right thing.
What is the superpower?
Well, some of our superpowers I'm going to keep confidential here, but
I'd love to hear about it.
Look, there's really no reason that a mortgage in particular shouldn't close in 10 days. There's some regulation that would prevent it closing, sooner than that time frame. But save and appraisal, that data is available. And I think that's what the consumer will expect. And on a purchase, you may not need to close in 10 days, but you should have a guaranteed approval. And if a mortgage can be done in 10, then a personal loan can be done in 1. And a lot of people will say, well, maybe that's, are you creating a dangerous experience? I think you're creating a better experience. And when you look at all the data, when you look at the information that we're able to see about the loan, the quality of the loan is the best it's ever been. The fraud has been reduced to, levels that I've never, I won't say there's none, but pulling that data in gives you a level of confidence that you didn't get in the old days with paper. And so we can get speed and also get quality. They go hand in hand. So I think that's one superpower, but there are others, and that comes down to client experience, it comes down to confidence, and like I said, it comes down to changing the way that you think about the business, but I'm not going to go any farther than that.
And so how are competitors really competing for borrowers today? Has the focus really shifted to technology and service over rates?
It's both. I think every consumer expects a great interest rate. Every consumer has been trained to shop for an interest rate, but they go hand in hand. Again, if you can close the loan faster, you should be able to provide a better price to the consumer, and everyone is winning here. So, I was watching, have you guys seen these birds? These bird scooters, if you're from California, you've seen them. If you're from Detroit, you haven't seen them yet.
I have.
And an interesting piece about it is when the bird needs to be charged, people can sign up, I guess, as bird chargers. And they take the scooter home and they charge it and they drop it back off. So they've gotten the user of the device involved in the care for the device. And that's the same way the lending business needs to be. We've looked at it as two separate things. Someone makes application and then your company goes to work. People want to drive their own experience. Give them the power and let them participate in the process. They're happier and it moves faster and it should actually drive your costs down. Again, our Rocket Loans team has done a great job with this. So it's just a different, interesting way to think about involving the consumer in the process.
Now, we have seen domination in this space shift from the bank lenders to non-bank lenders. How do you think that dynamic will continue to change?
Like I said, I don't necessarily think of bank, non-bank. I think capitalized, not capitalized. I think in a market that's more challenging, liquidity will be important, and so I think folks that don't have it will struggle a bit. But I think there are plenty of well-capitalized non-banks out there that will do just fine.
Now, there's tons of data in the lending business which lends itself well to artificial intelligence, machine learning. So where is that technology being applied today in Quicken Loans?
Quite a few places. So initially, when we look to give somebody a loan recommendation, we're using artificial intelligence, so we get smarter each and every time someone selects a loan product. Again, in an old channel where maybe a mortgage banker is selecting that and you weren't capturing why the selection occurred, it was hard to determine or learn from it. In Rocket Mortgage or Rocket Loan, we have that information. We can see the data that was provided. We can see why the consumer selected that. We can see the pull-through on loans that they select and when they close, what closes at 85% pull-through rate, what closes at 80% pull-through rate. And so we're using that for the loan kind of determination, and then we're using it all the way through the underwriting. And underwriting, again, is looking at pieces of data and making decisions, and it's perfect for artificial intelligence.
What are some of the biggest challenges in effectively sorting and using that data?
So again, a legacy business that we built for many years, a lot of our data was situated in different places, and only in the last few years have we really started creating our data lake, where we can get all that data into one spot to really, truly leverage it. And I think that's where startups really have an advantage. If you started your business in the last few years, you're not dealing with 10, 15, 20 years of legacy technology that you're working through. And that's been our biggest challenge, and we've kind of solved it, but getting all the data in one place so we can truly leverage it.
I also want to talk about your talent recruitment strategy. Being based in Detroit,
Yeah.
I'm curious, is it hard to lure tech talent? Are they coming locally? Are you luring them away from New York City, San Francisco?
I think we're very fortunate. We've got within a few hundred miles of Quicken Loans, we've got the University of Michigan, we've got Michigan State, we've got Ohio State, Penn State, Northwestern. So we've got a lot of great schools. up to this point in time, a lot of those folks wound up here on the West Coast, but more and more are staying. They're looking to kind of live in an urban environment and be part of something special. And although I know there's great opportunity everywhere, the rebirth of a great American city really seems to appeal to a lot of the folks graduating. And so we bring a few thousand people in over the year as interns. We kind of show them everything that's going on in the city. I think they're flashing some pictures of that right now. And we talk to them about the difference that they can make in the city of Detroit. And so our retention rate has been great for students coming out of the Midwest. The other thing that we're seeing is we're seeing a lot of people come back. So people went to New York, people went to California, but time comes to raise a family, maybe to feel like they could have a bigger impact on something, and we're getting a lot of people moving back to be with us in Detroit. So it's been a great experience the last 5 years.
Maybe they don't want to pay San Francisco rent.
It seems rather expensive out here.
Now, we have seen Amazon plow into one industry after another. They started with retail, but now they're in healthcare and finance. So it's also been reported they're getting into the mortgage space.
Yeah.
Does this terrify you?
Look, mortgages are hard. I'm not saying that delivering items isn't hard either, but I think mortgages are very challenging. And so no, if they want to participate in the space, I think that would be great. I think competition is good for all of us. It makes us, forces us to be smarter, to think differently. But I don't think fearing a competitor is a healthy behavior. I think you should embrace it and then get your team to work and just figure out what you're going to do to make sure you win.
So more startups in the real estate are also experimenting with blockchain. There was a startup recently that sold a home on blockchain or letting people trade on its protocol. Are you looking into this technology? How do you think it's going to impact the space?
Yeah, so we're looking at it, and we've got hackathons. People are bringing this concept to us. Probably the one where I've seen it take root is in title. Obviously today, keeping track of ownership and liens on property is a pretty archaic process. It takes months for that to get recorded. There are some situations I know where in personal loans, something, stacking, where a loan will wind up on the back of another loan because people weren't clear, how many loans someone had. In mortgage, sometimes that can happen if a home equity line of credit doesn't get recorded properly. You go to refinance the loan again. So I could see blockchain helping reduce that, and also, it really could replace title. And so that's an expense for the buyer and seller of a property that maybe with blockchain wouldn't be needed. I also worry though that sometimes, blockchain, I think maybe you even wrote this, I was reading an article, or maybe you interviewed somebody who said, it's sometimes a solution in search of a problem. So there aren't a lot of really, from a risk perspective, issues inside of mortgage in particular that at least are the primary focus. So if someone's got a great idea and brings it to us, that would be great, but we don't have a team of people working on it today.
There's also no shortage of startups trying to make the real estate market more liquid, whether that's making HELOCs easier, allowing people to buy stakes into commercial real estate. So are you excited about those innovations, or are you concerned about the potential risks they may not be thinking of?
I think probably a little bit of both. I think innovation is what makes everything move, and so we've got to have that. We just need to make sure that we're applying the filters and the learnings from the past as we innovate. We all know what too much liquidity in any lending market can do, and obviously mortgage in particular and real estate experienced that about a decade ago. So I think we've got to make sure that the liquidity is serving the right person and not creating a market that shouldn't exist. I just have to be very thoughtful because, look, you've got to make great decisions running your business. Back in the early 2000s, although liquidity was very available and guidelines were widening, we made quite a few decisions at Quicken Loans not to do mortgage products that others were doing. And under a lot of pressure, at the time I was leading the banker force, under a lot of pressure to open those products up. But you've got to know what's right for your business and for the long haul. And I think Scott was out kind of talking a little bit about this. That's our responsibility as lenders to make sure our products are serving a need that exists, and we're giving money to the right people at the right time, and we're not just chasing the dollar, because that's what creates, I think, some dangerous scenarios.
And lastly, we've got a just a minute 30 left. As you spend time here in San Francisco and Silicon Valley, how does this inform your potential acquisition strategy? Are you seeing a lot of entrepreneurs out there that you're excited about?
Absolutely. I think there's still something very special out here with the desire for people to take risk, to create, and that's an incredible thing. That's what moves business forward. I think we learned an important lesson in Detroit, that you've got to be innovating all the time. Growing up there, my family living there, we lived through some time periods where we weren't innovating, and we saw what it could do to a city. And so always pushing, always innovating, always looking for the next idea is critical. And there's something special out here where you find those types of people who are thinking about this exciting new world and where we're headed. And so we love coming out here. We make many trips a year. We like to participate in startup conferences, and we'll continue to do that because a lot of great ideas that we want to participate in. And maybe there's a company out here that wants to join the Quicken Loans family of companies and can add value, and that would be awesome too.
Well, there'll be plenty of networking outside, so thank you so much for your time,
Yeah,
Jay.
thank
It was
you.
a great conversation.
Thanks, everybody.